The market for providers of credit insurance and surety insurance is not fixed to the current companies. Startups and MGAs are entering the market. We have more MGAs and startups in the credit and surety world than ever before. These organizations add color and diversity to the market and are a source of innovation. So this panel will examine the MGA and startup space, and my colleague, strategic advisor SCHUMANN, will moderate this panel. So I pass on to you, Mike.
Thank you, Robert. So this panel is for those budding entrepreneurs out in the audience, those people in surety and trade credit. You've had success in your underwriting career, and then you're kind of thinking, well, maybe I can go a step further and start my own underwriting company. This panel really is for you to help you to think about what it involves and what you need to do. And we have some two very good panelists sitting behind the red screen at Aon in London. So Nick and Paul, who both have experience in exactly this field. So maybe if I can ask you, Nick and Paul, to introduce yourself. So let's start off with Paul, maybe.
Yeah, sure. I've been in the surety market since nearly 35 years, I think, something of that nature. Initially started out at AIG, then Liberty. I set up Liberty Mutual surety operations in Europe in 1996. I then went into the broking arena from 2001, and latterly was with Howden, running their surety book globally, and recently established Vault MGA as a new entry into, well, firstly the surety market, but we're also looking at other specialty product lines.
Excellent, thank you. And Nick?
Yeah, hi Mike. My current role is chairman of Aon's global credit reinsurance business. I've actually been in the reinsurance business for many years, more than 40 in fact, and of those probably 38 have been in credit area. And when I say credit, we're talking credit, surety, political risk. I've underwritten as a reinsurer, I've underwritten surety bonds, I've done direct reinsurance broking as well. I know when we spoke before, this was interesting. I think this is quite an interesting subject. And I would like to say, I think on behalf of Paul and myself, to thank Professor SCHUMANN for the opportunity to address this conference.
And I'd just like to say to you, Nick, I can't believe it's been more than 40 years. You don't look old enough.
Thank you, Mike. I know that you're always very humorous.
Thanks. And you both have good experience in this, because I'm sure that a lot of these startup teams, you're one of the first doors that they knock on, Nick, when they want to get help with their business plan. And of course, for Paul, you're right living this at this very moment. So you're both right on the topic here. So let's get started with our first question then. And maybe I'll throw this one at Paul first of all. So you're coming to the market with a new surety MGA, Vault. What would you say to those people who say, well, we don't really need any other MGAs or startups in the market, we have enough? What would your answer be? Why does the market need Vault?
I think there are three key reasons why a new surety MGA could be relevant. I think the first one is from a capacity perspective, but not just adding capacity to existing market capacity, but adding capacity where there is a serious need. For example, right now in the construction space, there's a significant requirement, and also in the renewable space. So I think capacity is a key aspect of why a new surety MGA would be valued in the current market. I think possibly one of the other key requirements or issues is there is a lack of expertise in this market space. And I think a new MGA that were to set up with particular expertise, for example, in the large structured surety risks, I think, could have a significant impact in the market. So I think those are the two main reasons. I think, it's not necessarily Volt's playbook, but there also could be good reasons from a technology perspective. For example, to drive the innovation for example, the use of AI in the underwriting and administration process. But from Volt's perspective, I think we will be bringing in new capacity where it's really needed, and I think we'll be bringing expertise to lead and structure difficult risks in the market.
Thank you. And Nick, do you think that the market needs more startups in credit and surety?
I think to a degree. It depends who you ask that question to, really. I think if you look at the trade credit market, and if you were to go to any one of the big three monolines, you might get a lot of people that would say we don't really need that many new players. Excuse me. I think, to me, the question would be more on what basis is the MGA going to be established. I think if you read the insurance press, MGAs are mentioned all the time. There was the reinsurance rendezvous this week, and MGAs were a topic that were very often discussed. I think, however, in terms of credit-related business, my own views on this is that you have to have a sustainable MGA. I think if you look at how reinsurers view this, not everybody views things in the same way, for example. But I think a lot of reinsurers look at MGAs and they want to see the MGA in action before maybe they will commit sizable capacity. Now, that's a bit, how can you get the capacity first of all? And some people will support it. I think if you have an MGA that does the market need more capacity? I think in certain sectors, as Paul mentioned, I agree with what Paul said. I think, however, in some sectors there is sufficient capacity. Do we need more capacity? Maybe not. But one of the things, again, that was mentioned this week, if you look at the trade credit sector, maybe MGAs, startups, whatever, can offer slightly different products. And maybe those products will be of appeal to a different part of the market that may or may not currently buy credit insurance. I think one of the themes this week, again at the rendezvous, was most trade credit insurers are having trouble getting the growth levels that they want. Clearly, after COVID, we had the rebound, we had inflation, but the last 6 to 12 months, if you like, the growth has come all the way down. And perhaps it's the products that we need to think about as well as just selling the same policy. And I think in that context, MGAs can actually play an active role.
Brilliant, thank you. So, Nick, these budding entrepreneurs come to you with their bright, shiny eyes, with their new business plan under their arm. And I'm sure some of them you're kind of rolling your eyes and thinking, oh dear. And other ones you're thinking, I think this one might have some legs to it. So what differentiates for you the ones where you're not impressed with their plan compared to the ones that you're going to actually back and help them?
Well, I would sort of, if I use one word and then I'll develop that, I think this word that often comes to my mind is sustainability. I think, there is a view in the market that some people set up MGAs as their sort of pension fund, and within a few years they'll sell out the MGA. And I think if you look at the nature of some of our business, the business that Paul does can go 5, 7, even longer years in duration. If you look at some of the credit and political risk tenors that are now, particularly if you look at renewables and project finance, tenors are 20 years plus. And I think in that context, therefore, if you are looking at an MGA with that background, you've got to feel comfortable, not just solely in terms of the underwriters and how they underwrite, but I think you've got to look at the claims is a very important one. Somebody said to me in Monte Carlo, one of the things that they look at when they're looking at MGAs is what is the claims culture? If you deal with an insurance company that's been there for quite some time, many, many years, you could argue that there is a claims culture within that company. If you look at an MGA and the MGA has claims control, what is the MGA's claims control culture, for example? And I think things such as succession planning, and again, I think that some MGAs that have set up in recent years, their business plans were quite optimistic, and for different reasons, the business plans didn't work out. Now, I think you have to have a sustainable business plan, and that, as I say, includes underwriting, claims, and one of the comments that the areas we're talking about here today is systems. And I think all of this comes together. And I think you have to have all of those really to get something that is going to be viable in the marketplace.
Thanks. So, Paul, what would you say? What do you think is the secret to differentiate a startup that's going to be successful and one that's not going to make it?
Well, I agree with everything that Nick has said. So I don't want to repeat that, but just to emphasise a couple of points. Really, I think the key is to have a very credible business plan that is different to what is currently available in the market. It has to be sustainable. As Nick says, the bonds that we issue can often run for a number of years. Carriers are very keen to ensure that whatever entity is writing on their paper is going to be around to service that business going forward. But a credible plan is key. And maybe I'll just make a couple of other points. One, you need experienced practitioners, but I think it's broader than just experienced underwriters. You need people who have operational capabilities, that's systems related, for example, and finance and compliance and legal. So I think it's more than just a couple of underwriters coming together and saying, fancy setting up an MGA. I think my advice would be to enroll the services of a broader church, so to speak, so that you're covering the other aspects of what is required in setting something up. And I think the other point I would say is it's about having really good partners. So you mentioned, Mike, that Nick is probably the first port of call for a lot of these business plans, and it's important to work with something like Nick, a broker that understands the market, has access to paper carriers and reinsurers. I think that's key. I think there needs to be partners from a systems perspective, human being one, but there are other aspects of what's required. For example, access to things like S&P, Capital IQ, pricing models, things of that nature. I think there needs to be partners in the funding space, lawyers, and also partners that can help you with your regulatory platform. So I think it's a credible, detailed, sustainable business plan backed by experienced practitioners, not just underwriters, but you need partners as well to support that.
Yeah. And just to second what you said there, I fully agree. And from some personal experience I've had and pain I've had outside of the credit and surety world, but still in the MGA world, it's about running a business is not the same as being a good underwriter. And it's about the people you've got on the board, the non-executives you've got on the board, the ability to run the business. And don't underestimate how difficult that is and how different it is from underwriting. But unless you've got that part right, you might be fantastic at your particular underwriting niche, but if you haven't got that part right, you might find that your business is not going to survive through the first 3 years. So, okay, so let's come into the role of technology, which is clearly becoming more important for current day startups and MGAs. Nick, when you're presenting to reinsurers, capacity providers, carriers, what difference does the role of technology make to the story that you're going to tell them and the response they're going to give you?
I think one of the facets, as you know, Mike, when you get older, you often look back and think about how things have changed. And, we had a couple of conversations at the Reinsurance Rendezvous this week about what's the biggest change that you've seen in your time in the market. I'm not sure if this is definitely the biggest, but I would say that the use of data, the need to have data, is hugely, hugely different now from what it was 20, 30 years ago. Underwriting, capital management, all of this stuff is dominated by data. Aon spends a fortune on data production, actuarial resources, models. We have models for credit, we have models for surety, And all of these are used by our clients, and they're available to reinsurers because they actually help people to make a decision on whether they're going to write a risk, support an MGA, etc. I think if you look at it from the reinsurer's angle, risks are getting bigger, aggregations are getting bigger, and that could be single risk, that could be sector risk, it could be country risk. And the need to understand what your risks are, how much exposure you've got, all of those factors, I think is as huge now. In fact, it's much larger now than it's ever been. So if you put that all together, I think the need for systems is massive. I think if you look at some of the way that the market has developed over time with mergers and acquisitions, there's lots of systems. Companies have legacy systems. A number of our clients have brought new systems in recent years, and it's not a straightforward proposition because you've got legacy systems that could be on different platforms, etc. And I think if there is one advantage, I would say, of a startup, it's that if you can get that system at the beginning and you've got everything that you need, that's obviously puts you in a very good position with your trading partners.
Yeah, thanks. So Paul, for your business plan, how important is technology in your business case?
It's key. I mean, I started in 1989 at AIG. We didn't have emails. We relied on faxes that we needed to photocopy, so that the world has definitely moved on. For example, right now, what's becoming really important to carriers are pricing models. And, they're a key issue in terms of showing discipline in terms of the underwriting process and also to derive some form of answer to what is an acceptable return on capital. So pricing models are important, which are very much reliant on data. We're also required to have access to things like S&P Capital IQ, Moody's equivalent, or to monitor risks and also to find out to rate risks. For example, the SCHUMANN Finoyo facility is also something that I think is important in the round in order to be able to rate a risk, to show some underwriting discipline as opposed to looking at the accounts, going to meet the client, writing up your notes and making a credit committee submission. Those days I think are over. The data is important. You need to price the risk properly, and you need to have access to these rating agencies' information. And also you need it in order to be able to track your ongoing exposure to these clients as your risks mature. So it's a key part. Also, from a pure operational and administration perspective, starting with Excel spreadsheets and multiple platforms with emails, I think those days are very much over, and Vault has bitten the bullet and is going with the SCHUMANN system. It's very, very comprehensive. It's a proper operational platform, and one that demonstrates that we're sustainable. Just want to go back to one of the points that Nick was mentioning, that we're a sustainable business and we're taking it seriously. We're a business of substance. Not necessarily so completely relevant for what we're looking at, but potentially could be is the use, for example, of AI as part of the underwriting process, the operational process. That's a little bit beyond my abilities, but it's something that I'm certain that we'll be looking at in the future, in the next year or two.
Yeah, thank you very much. For those of you out there, if you want to ask any questions of Paul and Nick, feel free to do so, and we'll see if we can fit those in the last 4 minutes. Maybe let's go out a little bit and think in terms of the existing insurers in the market. How do you think existing insurers, so they're well established, how should they respond to startups and MGAs, do you think? And how can they stay competitive in the face of startups and MGAs? Paul, what would you say?
They need to brush up their games, I think, is the answer to that, Mike. They need to improve their service levels. They need to improve their technology offering. They need to be more transparent in terms of their process of determining what risks they will and won't write. They need to be timely in their response, predictable in their response. I think MGAs bring a sharper focus to the market. And I think if the existing markets want to compete against those, they need to match that. Sorry, we're having some technical problems with our lights here, but hopefully you can still see us.
We can still see you. So, Nick, some of the larger and most established insurers are equally close to your heart as the entrepreneurs are. So, what would you say? How should the established companies? How would you like them to view these startups that you're playing with?
I think to a degree, Mike, it's dependent on which business line and what the startups and the existing insurers are doing. Now, what do I mean by that? I think if you look at the whole turnover trade credit market, I would say that the way, and you know this because you were part of that for many years, the way that market is structured and established, I don't think that the big companies are going to feel so threatened by startups because of the absolute scope of their operations, global size of business, etc. I think some of those companies have possibly a more positive view towards startup because they see that startups and the new companies can do things that fall slightly outside of their bread and butter business. And because they want to concentrate on their bread and butter business by and large, not absolutely, then we've got like it. There you go. Then because of that, they can work together efficiently. I think if you look at, for example, the single situation credit political risk market, I think that has developed dramatically in the last 10, 15 years. You look at the number of underwriters now in that marketplace, I'm not sure the current number, but I would suggest it's 60 plus, possibly even 70 plus. A lot of those entities have set up in recent years. So the technology side, if you like, has been introduced into the business as part of those businesses being established. Do people want to see new startups? It depends. It goes back to what I said before. If you said from a pricing perspective, I think new startups, people fear, how is the startup going to establish itself? Something I think we discussed this a couple of weeks ago. There was an article in the press about ownership of startups, and if there's private equity firms involved, how quickly do they need to generate returns? How does that impact how the startup will underwrite? What does that mean, therefore, apart from the technology aspects, about how quickly the business will grow and how does the startup develop that level of business if they are required to do so in a short term? So there's all sorts of things, I think, in terms of this particular question that are relevant. The technology side of it is very important, but I think also the business purpose, as Paul mentioned, the business plan is key.
Brilliant. Thank you. Well, thank you very much to both of you for your comments and for joining our panel. And in particular, best wishes to Paul with your new business. And we'll be watching that closely to see and admire how it develops. Thank you very much.
Thank you, Mike.